what we've done in this space, and I think you hear that tagline, regulation by enforcement, a lot. And I actually do think that's a fair characterization of what we've been doing at the SEC. The kind of sad thing about this whole thing is that there is a lot of bad activity in the crypto space. And there is room for enforcement. There's a lot of outright fraud, and we can bring those cases, and we do bring those cases. But actually writing rules that make sense and providing exemptions, saying to people, you have to comply with the obligations here, but we understand there's some differences, so we're going to give you some flexibility in how you comply. Having that framework in place would make it easier for us to identify the bad actors. It would make it easier for the good actors to focus on building what they're building and spend less time thinking about regulation. And it would make it harder for the bad actors to thrive and flourish and take advantage of people. And so we are not only going about this in a very inefficient way, but we're also contributing to an environment where it's really hard to tell the good guys from the bad guys.
Welcome to Tech Intersect. I'm your host, Tanya Evans, and my life and work exist at the heart of law, business, and technology. Yeah, I've earned a few fancy titles and degrees over the years, but the bottom line is I'm a writer, speaker, teacher, and lifelong learner. And I'm really excited that you've joined me on this journey. So what is Tech Intersect? Well, it's authentic, empowering conversations with really interesting guests who demystify complex topics to prepare you for the future, because your future is now. And it exists where law, business, and tech intersect. Get ready to listen, learn, and leverage. Let's get started. In this episode of Tech Intersect, I am really thrilled to welcome Securities and Exchange Commissioner Hester Peirce to the show. Commissioner Peirce has held this position since January of 2018, and ordinarily she would be speaking to my blockchain, crypto, and law students at Penn State Dickinson Law School, but I am on a research leave this year to finish a book, do a bunch of research and writing projects, so I decided what better way to continue the tradition and to share this annual conversation that I always look forward to with my wonderful listeners of Tech Intersect. We also recently celebrated 150 episodes, so this little podcast that continues to chug along. I invited Commissioner Peirce on to discuss the current regulatory environment for crypto assets and to explore her personal views about the need to calibrate a regulatory approach that obviously protects investors while also protecting innovation here in the United States. We'll talk about all of that and more in a moment. But first, Commissioner Peirce, welcome.
Well, thank you, Professor Evans. It's a delight to be here. I want to give my standard disclaimer, which is that my views are my own views, not necessarily those of the SEC or my fellow commissioners. It's great to be here with you in this podcast form. I know that we've been talking about these issues now for a number of years. I think you probably were one of the first people that I talked to about crypto regulation. And it's something I know you've been thinking about for a long time. So I'm excited about this conversation.
Excellent. Well, it's always great to check in. This space moves so quickly, even more quickly for you than for me. But as an educator in the space and trying to be really thoughtful about this from certainly a policy point of view, I teach administrative law as well as crypto and blockchain law. So it's always interesting to see the intersection and it really play out and come to life so much for my students and for me personally as I watch it grow. So I think a yearly check-in that we might be delayed. We might like a quarterly. You might have a few other things to do, but I'm just pitching that.
It does change fast, I will say, but I can't imagine a better set of issues to talk about administrative law with respect to as well, because there certainly are some areas, I think some lessons that we could learn from administrative law books and how we're approaching this.
Absolutely. Well, let's set the stage. If you could give our listeners, they're coming from a bunch of different points of view. Certainly there are lawyers, but a lot of law students, and then those who are crypto curious or new to the space. They hear a lot of the jargon and the buzzwords, but they don't really have a good background or point of view for even what the SEC is and does. And I always love to share your path to the work that you do today. So if we could just start there with your path and then just generally at a high level, what the SEC is charged to do.
Sure. Well, I came to the SEC first about over 20 years ago as a staff attorney. And then I left and I came back in this role. For me, the SEC is a nice mix of my interests. I like economics and markets. And I think regulation is really interesting. And this agency has been around for 90 years, so a long time. And we are one of the federal regulators of the capital markets. We regulate stock exchanges, broker dealers, investment advisors, public company disclosures, mutual fund disclosures, those kinds of things. So we have a really important role to play in ensuring that investors and founders of companies are able to meet together and cooperate together to build great companies and to then power the rest of the economy.
Yeah, because I think that people don't fully appreciate or understand, and they try to make sense of the difference and the distinctions and the regulatory lanes, if we could call it that, between the SEC, CFTC, and many other regulators that inform and impact the space. And part of that is just because of the complexities of the technology in and of itself. When I think of the programmable money, when I think of decentralized and distributed means of organizing data, that just really seems to be challenging. I wonder, just given your background, if you have thoughts about just the nature of the technology itself as it comes face to face with existing laws.
I think it is important to think about it from that perspective, what the technology is trying to do, and therefore what regulatory framework makes sense. And some of that is a little bit difficult to know. You pointed out some potential uses, programmable money, distributed organizations generally, figuring out ways to enable people to cooperate with other people that they don't know, an important piece of it. And some of this doesn't really sound very much like it would fit within the SEC's jurisdiction at all. And so I think we have to be careful, whatever we decide to do on the regulatory front, to keep open the potential for this technology to transform different parts of our lives. So I can think of some ways in which the technology could change the way we do things in the securities markets. It could change the way, and who knows whether these will come to be, but it could change the way the fixed income markets work, because you can actually figure out a way for a bond to travel with lots of information, that all that information can travel along with the bond. That's a very powerful thing. Or you can think of in the equity markets, where if you're a shareholder in a company, you might not want the company to know who you are, but the company might want to communicate with you. Well, there's a potential for the company to be able to communicate with you without knowing who you are if everything is on a blockchain. And then they're just speeding up settlement is something that we're always thinking about, because the distance from the time when you buy a security and the time when you actually give the cash over and you get the security, that takes some time. And during that time, there's risk. When that transaction is open, there's risk. So it can take some of the time and make that a shorter time. That is valuable. So there are lots of potential uses for the technology in our space, but there are also a lot of uses that are completely outside of our space.
That's a really good point, because when we're so focused, I think just because this technology, the first area of real disruption was to financial markets, just the use of money, et cetera. But there's so many other things. It often makes me think of the initial conversations around the first real commercial use case of the internet with electronic mail, right? Where now people don't even want to open email, and all of the things that we can now do as a result of the innovation that we couldn't really have conceived of at that time. And to think about if we had shut down the internet or radically controlled it because no one wanted spam anymore, all of the uses we would have lost sight of that we never would have discovered through the development of technology over time. So I think that point is well made.
Well, and I think also it's important to remember that when the internet first got here, we didn't have a sense of how connected we would all be, because it seemed impossible to think that we would have all our computers connected with one another. And it seemed dangerous, right? And there were dangerous aspects to it. And, over time, there were security layers built in. And I think it's interesting to me to think about. And again, I remind people all the time, I'm a regulator. I'm not a technologist, and who knows whether I'm right about
it's
this.
hard to tell sometimes, because you know quite a bit in this area. But go ahead.
Well, that's nice of you to say. But there are these public blockchains that are permissionless blockchains. And so the idea that you could actually have financial market entities building on top of public blockchains, it seems a little scary and a little unlikely. But then when you think about that, well, that's sort of it is possible to build something on top of it that has permissions and has protections built in, but uses those public rails. And so it'll be interesting to see whether that materializes.
Absolutely. And I think that actually leads nicely into a consideration around as people continue to build on top of this initial layer. When I think of like layer one and the need for interoperability, open source software, actually that was my first entry into the space. I'm an intellectual property lawyer by training. So I was always really fascinated about open source software and how people started to ask questions about building on top and monetizing, et cetera. And that's part of the robust innovation that I'm always interested in. I suspect you are as well. But there's so many people who are building in the space, maybe not even directly in financial markets, although certainly impacting, but maybe have a business or are trying to develop the bricks and mortars of the space. But so many people talk about, obviously, a concern for a lack of clarity or regulatory frameworks. I recently testified before the House Financial Services Subcommittee on Digital Assets, Financial Technology, and Inclusion about this topic. And I'm wondering what steps you think regulators kind of at a high level can and should take to provide more certainty and guidance so that market participants would feel more confident.
Well, there's certainly a need for us to provide more certainty. I think that almost everyone I talk to in the crypto space is asking for some clarity. It's not that they're asking for no rules, they're asking to know the rules. And so I think we could be doing the work. Some of this has to come from Congress, so it's good that you and others are speaking to Congress. But some of this can come from us, right? We as regulators can lay the groundwork. We can work with the CFTC, and together we can hold public roundtables, talk with people, and build the base of knowledge that's needed to figure out who should be the regulator, what should regulation look like. We have been now for years, we've gotten stuck in this question of, well, is it a security or is it a commodity? I really think we need to take a step back and say, what are we trying to do here? Well, maybe with trading platforms, we're trying to regulate the trading platforms to ensure that customers know what the story is when they're trading on these platforms. There's transparency into it. With the tokens, having an understanding of who's behind the token, what the plans are for the token, and so forth, how many of them there are out there. Those are the kinds of questions people want to know and answers to. And so why don't we focus on addressing those without thinking so much about trying to fit it into an existing box? I think that would move us further along. And then an important piece of that is going to be thinking about how does the technology itself displace regulation in some places. It's not to say there's no regulation at all, but there's some areas where if you have something that's really decentralized and you have something that's open source, to your point, if the underlying code is open source, if it's permissionless, anyone can interact with it on the same terms. Those are things that you don't see in the traditional financial market. And maybe there's an area where you don't have the same regulatory frame, or you have people interacting peer to peer. You don't have this intermediary. That's a very different model than what we see in traditional financial markets.
You love listening to podcasts, but have you ever thought about starting your own podcast? Maybe you want to build a brand, grow your business, or are looking for an excuse to talk about your favorite hobby. Whatever your reason for making a podcast, Buzzsprout is the place to start. Since 2009, Buzzsprout has helped over 300,000 people launch their own podcasts. Buzzsprout walks you step by step through the whole process and will give you powerful tools to start, grow, and monetize your podcast. Ready to get started? Click the link in the show notes to get our free step-by-step guide to starting your podcast today.
I'm glad you mentioned that because I've often thought that the whole point of the technology is to facilitate this exchange of value in a very transparent and accessible way. So through technology, achieving what we hope to achieve through law and through regulations because of the lack of transparency and the need for a sufficient amount of information to make an informed investment decision, for example. And there's so many aspects of, in the ideal setting, for the technology to actually solve for some of those issues. So we might get to the point, my words, not yours, certainly, of overregulation in a place that doesn't need it because the technology is taking care of and mitigating some of the risks that are inherent in a system that doesn't have that. And that makes me think of sometimes I hear critics say that crypto is inherently vulnerable to abuse, whether it be by criminals, hostile foreign actors, etc. What is your response to those concerns, and how do you think regulators should address or calibrate the difference between the technology and those real concerns?
I mean, I think it's like any other technology. Bad people can use it for bad purposes, and that's what law enforcement is for, right? Going after bad people doing bad things. But your point, I think, is a really important one. And it's actually one of the things that's really concerning to me right now, a trend that I'm seeing, which is to say, well, it doesn't fit into the regulatory mold because we don't see centralized intermediaries. Now, obviously, there's a lot that goes under the label of crypto, and 2022 was a time for us to see a lot of centralized entities with the crypto label that had centralized entity-like problems. But if you put that aside and you say, okay, let's look at the underlying technology, and there's a temptation for regulators to say, we are going to force you into a mold of having a centralized intermediary. That completely defeats the purpose. And it has the potential to introduce problems into crypto that don't exist. So there are challenges to regulating this area. And one of the challenges is that because it is permissionless, because it's pseudonymous, right? You don't necessarily know who you're interacting with. You can end up having bad actors using the technology for bad things. And it can take some work to figure out who's actually doing something. So fair enough, there are challenges. We have to figure out how to deal with those challenges, but we also have to look at the opportunities the technology provides. And I think we're at a pivotal moment for that, because as a regulator, I know that regulators sometimes get concerned when they feel that things are going to be happening outside of their immediate control. And when you say to them, well, but maybe there's a way to solve the problem without writing a regulation for it, then, it makes us a bit uncomfortable, right? And so we have to sit down as a people and think about whether we're approaching this the correct way or not.
Hi, I'm Dr. Tanya M. Evans, author of Digital Money Demystified. And I want to let you know that to stay on the leading edge of any opportunity, especially investing, you have to empower yourself with the tools and resources needed to keep your knowledge and skills current. And if you're relying on last year's information or even last month's, look, you're already behind. Sure, you can try to figure this out on your own at YouTube University. The problem is, it's difficult to separate fact from fiction with so many carnival barkers banking on your inexperience. And of course, there are the naysayers, usually from legacy finance, banking on your fear, while they quietly help their high net worth clients to invest. All of it muddies the waters when all you want to know is how to get in safely, legally, and confidently so you're not left behind. That's why I wrote Digital Money Demystified, where I take the top 10 crypto myths head on and give you well-researched, well-supported facts to empower you to make good choices out there in the new digital cash economy. As a law professor who developed the first blockchain crypto and law online certificate program, a retail and corporate crypto policy and education trainer, and a thought leader appearing regularly on national media, I've done the heavy lifting so you don't have to. Look, there are plenty of books and courses on which crypto assets to invest in. Digital Money Demystified is the book you read before you dive into those. So head to digitalmoneydemystified.com to learn more and prepare for the future of money and wealth today. And that's why, thinking back to something you said earlier, the both and approach to things that Congress can do, and certainly that regulators within their delegated powers, and the SEC certainly has a great deal of discretion in the approach. And that's not a bug, it's a feature of having a framework from an organic act point of view. For those who don't know what that means, basically there's a statute that empowers agencies to do certain things, and it's all over the map about what various agencies can do. Some are part of the cabinet, some are independent, but it's all part of the ability for Congress to set the framework, and kind of the day-to-day interaction of applying that really resides with agencies. And so it's set up that way. And that leads me to a question that I hope you can help listeners understand about the different approaches. So I hear a lot of people talking about regulation by enforcement, which would be the powers of adjudication versus rulemakings. I've read so much of your work and your thoughts about guidance and how all of these, like you have a lot of tools in the toolbox here to regulate, with all of the discretion to use adjudication, focus on one or a few versus the rules of the road for an entire regulated party or regulated environment. What are some of the ways as a regulator that you approach this idea of kind of both and, not either or?
Yeah, and I think that's a good way to look at it is we do have a bunch of tools in our toolbox as a regulatory agency. Enforcement happens to be one of those, and it's one that often gets the most focus, but we have other things that we can do. We write rules. As you said, we get our authority from Congress and our statutes, and then within that, we can write rules to help flesh out the statutory provisions, and then we can bring enforcement actions based on violations of those rules. What we've done in this space, and I think you hear that tagline, regulation by enforcement, a lot. And I actually do think that's a fair characterization of what we've been doing at the SEC. The kind of sad thing about this whole thing is that there is a lot of bad activity in the crypto space, and there is room for enforcement. There's a lot of outright fraud, and we can bring those cases, and we do bring those cases. But actually writing rules that make sense and providing exemptions. So saying to people, you have to comply with the obligations here, but we understand there's some differences, so we're going to give you some flexibility in how you comply. Having that framework in place would make it easier for us to identify the bad actors. It would make it easier for the good actors to focus on building what they're building and spend less time thinking about regulation. And it would make it harder for the bad actors to thrive and flourish and take advantage of people. And so we are not only going about this in a very inefficient way, one-off enforcement actions, but we're also, I think, contributing to an environment where it's really hard to tell the good guys from the bad guys.
I think that's really well said. And it brings up another concern of mine personally, that so much of this will be pushed offshore to other jurisdictions where it makes it more challenging to reach them, even though they're having an impact on United States investors and consumers from other agency points of view.
Absolutely. We're seeing that happen. And you're right. Is that really protective of Americans to say, well, we're going to push it offshore, and then if you want to access it, you get to access it without the protection of our rules?
Right. Absolutely. So looking ahead, what do you see as some of the more pressing regulatory challenges? How do you think short-term and long-term they can be addressed? Because this is, I certainly agree with you, this is an inflection point this year in particular, and things move so quickly, as we've said. We don't even know where we will be or this technology will be in the few years ahead.
Well, I think the biggest regulatory challenge that I'm thinking about, I mean, of course, this clarity, getting clarity from Congress would be helpful, but I think the biggest regulatory challenge for us is going to be a willingness to think with open minds about the potential for this technology to need a different kind of regulation. Again, it's not to say no regulation, but a kind of regulation that allows it to survive here in the United States. And that doesn't say, well, the answer is to just say you can't do that, or you have to form a company in order to do that. So I think that's the biggest challenge, because that is so foreign to us as regulators. And it's really important for regulators to be talking with people who can help them think through these issues, and to do so in a very open and public way so that everyone can be part of this debate. We can't solve these problems by having one-off conversations in enforcement actions or in backroom negotiations with particular entities. This has to be a very public discussion that allows us to think about how we respect fundamental American principles about people's ability to make choices for themselves, people's ability to engage in financial transactions without having all of those watched by the government. So these kinds of things, we have to sit down and talk about this. And this is going to be a challenge for regulators.
Final question. You've been vocal about the need to support innovation. We've talked about that for this entire conversation as well. And I've been intrigued by some of the initiatives and proposals you've thought about either in dissent or through tweets as well, where I get all of my crypto news, but different initiatives or proposals that would be most supportive of innovation here in the States to achieve that goal.
Well, I think, again, this is a matter of us just using the tools that Congress gave us. Congress actually saw that when they wrote the securities laws 90 years ago, and then in the intervening years, they've updated them. But when they wrote those laws, they understood that the market wasn't going to sit still. And so they gave the SEC authority to give exemptions, to make adjustments, to think about how the rules would apply in different ways, to allow people to experiment. And so it's really just a matter of using that ability, again, without compromising the regulatory objectives Congress gave us, to allow people to experiment. It's just pulling that tool out of the toolbox and actually using it instead of letting it get covered with dust.
Well, I would like to go on record saying that is my favorite tool. We have been talking about the proverbial sandbox for many years in the crypto space now. So that's my favorite. I'm waiting with bated breath for that day. I'm not going to hold my breath, but I will wait with bated breath. Is that fair?
Yeah, fair. I'm doing the same.
Commissioner Peirce, please let folks know where they can learn more about the Securities and Exchange Commission and certainly you and your work.
Well, you can find our agency at sec.gov. We also have a website, investor.gov, that has various information for investors. And then you can follow me on Twitter, and I'm easy to find. I think I'm at Hester Peirce. I should know my Twitter title. That's where I am.
I will share in the show notes. We will make sure all proper traffic goes to the right handle.
And I love to talk to people too, so don't hesitate to reach out to my office and set up a meeting.
Outstanding. I love your accessibility and your humility and the impact that you're making. And thank you for always answering the call and continuing the conversation. I appreciate you very much.
Well, likewise. And thanks for being willing to chat. And I look forward to doing that again soon.
Thank you so much for listening to the Tech Intersect podcast. I hope you enjoyed this episode. If you love it, please tell the world. If not, go ahead and tell me. And in either case, drop a comment or ping me on social media at IPProfEvans with the hashtag Tech Intersect. And finally, a quick reminder on digital safety. There are a lot of scammers out there impersonating me and others, and I need your help. Now hear this, and remember, I will never slide into your DMs to say peace and blessings or hey, and I will never reach out to solicit your time or your money on social media like ever. I'm not a trader. I am an educator and an attorney licensed in 4 states. Thank you very much. I'm here to inform, inspire, and empower. No cap and definitely no Forex. So be careful, make good choices, and remember, I developed an entire free masterclass about the topic of digital safety in the crypto space. So check out secureyourcryptobag.com for more information. That's secureyourcryptobag.com. All right, that's all for this episode. Until next time, continue to shine.